From the floor of the CME Group, this is Danny Riley on this Wednesday, December 30th. We have exactly 1.5 days left in 2009, and what a year it's been. We've seen so much big ups and downs. There was so much concern about the way the markets were acting in the beginning of the year. The government came in and did their big stimulus, and it's held the markets together much better than what many people thought. I'm going to read some stats here because I'm not really good on the memory side of all this. But anyways, as of right now, the S&P is up 24.58% on the year. It's up 64.66% from its March 9th lows. This is an incredible move up. It's much larger than what most people thought. You know, after the market bounced, everybody said, well, you know, we'll get a bounce in here, but I don't know that many people that really said the S&P would go up as much as it did. A couple other little stats. Well, we'll move off the stats and onto what's going on in the S&P today. We're seeing a little weakness in the S&P today, which is probably what it's supposed to be doing. The banks and the retailers are down a little bit. It's got the S&P down 50 cents. That's 0.050 per handles. That's like nothing. The NASDAQ is up on the day. The S&P is down. Over in the 10-year note options, they've got about 20,000 volume. They too are kind of on a year-end nothing going on type thing over there. Over in the euro-dollar options, they've got about 105,000 traded. That's pretty much in line with what we've been seeing over the last couple of weeks. Now, we're going to move into what we're going to be thinking about into the year end. There's a trade that we've always looked at, and it's called the walkaway trade. It occurs at about 12 o'clock on the last day of a quarter or the last day of the year. It's what it is a mutual funds, the pension funds guys, they tend to walk away. They have no more buying left to do, and they leave the market vulnerable to a little bit of a sell-off. We don't think that this is going to be something that's going to continue right into 09, or at least not right away, but here's some of the stats. The Dow has been down 10 of the last 13 occasions. The NASDAQ has been down 9 in a row, and that's after a run of being up 26 in a row. So this is good. This really is something to be looking at. The way we see it, the buying has been all used up. There's nothing left really in the year other than just tomorrow's mark and where the S&P is going to close out in the end of the year. It's our feeling that there's more than likely, based on these statistics, that there's probably going to be more sellers around than buyers. But to tell you the truth, there isn't anything here. Right now, the total volume in the big S&P is only 2,500. In the mini, we had about 100,000 traded, and they've got 382,000 on the board. That comes out to 282,000. These are some of the lowest volumes that we've seen, even on a half day, like on a Thanksgiving day. But as far as the rest of the day is concerned here, we want to thank everybody from the CME. We want to thank all our troops overseas, both in Afghanistan, in North Korea, or South Korea, and Iraq. They've done a great job for the United States, and we know that the problems around the world are not over, but the United States continues to do its best and putting its best foot forward for setting up, stopping the financial crisis and moving forward with the way the market should be acting. We're hoping the best for everybody in 2010, and that's it for us from Top Step.